My name is Mark Johnson. I'm a program director here at ARPA-E. I work in a couple of the areas, critical materials and advanced storage, and do a little bit of work with some wind stuff now as well. But one thing about ARPA-E program managers should point out is, as Arun likes to say, we've got 1 foot in technology and 1 foot in business. So we've come out of a range of backgrounds on that. And we've really structured the day around that. So we've spent the morning today looking at where are some new technology areas that we think might be some interesting areas to kind of spur ideas out there. Also trying to get your input and saying, you know, where are you looking at some technology areas? And then through the afternoon today, looking at sort of how do we take these technologies that are being developed and move them as definitive steps through an ARPA-E program towards the market. So you listen to Steve Blank and some of those approaches, and learning how to talk about your technology and talking about your products and how that becomes a marketable opportunity. So in this session, we want to take it 1 step further. So you're an inventor, you're a developer of technology, you're working in your company, and you really are looking now at saying, how do we engage corporations out there to wind up getting that technology out into a market? So why corporations? Well, corporations play a lot of roles, and you're going to be dealing with corporations in the business world. They can be your customer, first of all. It's great to have them as customers. Very least, they're your suppliers, potential competitors, potential collaborators, and potential investors out there. So it's understanding how decision-making works in the corporate world, understanding how to talk about your technology, and identifying how decisions are made is a really important thing in getting a technology to market. So that's what the topic of today's this session is really looking at that engagement. And we've invited a group of people here who come from the world of sort of corporate investing, and to talk at different facets of this, to say, you know, what are the things that you're interested in? What winds up? What are the ways you think about technologies that you want to create some partnerships with? So we'll start out here. We've got Farshid Arman from the Siemens Technology to Business Center. So this is a group within Siemens that's really looking at how we can identify some emerging technologies that are going to have impact and help move them down that pathway towards the marketplace. We have Pulakesh Mukherjee from BASF. And what they're looking at is saying, where can we make some critical investments in the technologies, and again, moving them closer and closer to the marketplace. And third, we have David Parekh from United Technologies Research Center up in Hartford, Connecticut. And they've got kind of a couple of roles. One is to be able to take R&D out of their own labs, as well as how you wind up engaging with the world around them and saying where there's new technologies they can bring in and move towards those business sectors. So I'm going to ask each of them to come up and give about 5 to 8 minutes of introduction, 8 minutes or so of introduction of how they think about that corporate engagement with new technologies, particularly in the clean energy space or in the new emerging energy space, and how they think about it. And then what we're going to do is open it up to question and answers about how to engage with them. So with that, Farshid. Thank you.
Hi everyone, thank you for your interest. I am from Siemens Technology to Business. We call it TTB. We are in Berkeley, California, just a few blocks from UC Berkeley. And basically, the way we look at things is from the corporation's perspective. So there's a lot of talk about what the government wants, what the startups want, what the universities want. From corporations' perspective, from big corporations' perspective, there is 4 ways to place a bet, or a few ways to place a bet. How do you put money down to do something new? So the biggest percentage of the money always goes to the internal R&D. These are the people who already have a product and they are making it better. So that's one. The second one the big companies have is a research center. Like David is from United Technologies. We also have a research center. I'm sure BASF has a big one. So these folks are always working on some kind of a fundamental approach to things. It may turn into a product, it may not. We don't know. A third popular way is venture capitalists. So Siemens has VCs and BASF has VCs. I don't know, Dave, does UTC have a VC?
No, No, we don't.
So there's nowhere to go to give an elevator pitch about elevators? No?
Lots of places to go.
That's a shame. Okay. So anyway, most of the companies have them. GE and Intel is the biggest one. So I'm from the fourth one, which is combination of R&D and VC. We don't, unlike VCs where they want mature technology and a pretty good bet that this is going to return money. We want that, but we are not shy from new technologies. So we don't mind working with new things. So if it's just a piece of paper, we can start with that. If you already have a prototype, we start with that. And we are okay to invest. So bottom line is we are not afraid of new things. The only thing we ask for is it has to relate to what Siemens does. So we combine the early stage atmosphere of a research center with the investment and nurturing that you need in a seed stage investment type. And that's what we started maybe 12 years ago. And this is what is referred to as outside-in innovation. And the thinking behind that is, we have 370,000 people around the world. There are a lot of good ideas inside Siemens, but by definition, most good ideas are not in Siemens. So we are the outside guys looking to bring good ideas into Siemens. So where do we get these ideas? Our preferred way is to work with startups. And when we find a good startup that has something to do with Siemens, we have multiple ways of working with them. Sometimes we invest in them in the seed stage. Sometimes we do contracts. This doesn't dilute the shares. We just give a contract and ask them to do some work. So that is the one we do the most. But we also work with universities. If the university has a good idea, we license the technology, we hire the PhD, we contract with the professor, we do whatever. We have quite a ways of going. And the third place we can do is national labs. We haven't had much luck in that. We have tried, and we're going to keep trying. We think there's good ideas there that we can commercialize, but so far our past has been either universities or startups or combination of the two. So what do we do when we start? What does TTB do? Once we have and we have a project in TTB, yes, there is money on the table, but then there is more than that. Now we have the validation available. We can go to our product managers, and there's thousands of them in over 17 divisions of Siemens. You guys know there's so many things. Energy is one of 4 sectors for Siemens. We have all these product managers we can go to, and they can, within one email, say yes or no to very simple questions, which will save a lot of time and a lot of money for both of us, Siemens and the startup. So that's one thing we do. Second thing is, as the project is going on, things go wrong. Minimum things that happen is Siemens reorganizes. That happens all the time. But the other things go wrong is the technology is not as good as we thought. Or the founders break up. Things happen. So we are there to make sure it doesn't mean the project is dead. We keep going. So we've been, like I said, we're doing this for 12 years. We've seen many, many things happen. We are prepared to kind of deal with all the unexpected. But the fundamental way we approach it is TTB and the startup or the good idea, we are together to make sure that the Siemens divisions take the idea, make it a product. So we are on the same boat as you when we sign up. Once we sign up, we are the same boat. Then we are there to translate what you say to the big guys and what the big guys say to you guys. So that is very critical to say we are aligned up with you. That is the main thing we do. So there are a lot of other companies who have something similar to what we do. And they've started out. And I just wanted to make sure that you guys know Siemens is not the only one between R&D and venture capital. We call ours TTB, but there's a lot of innovation centers. All the ones that I know are in California, in the Silicon Valley area, very close to where we are. But they are corporations of all nations. They're not just American companies, or in our case, we are German companies. But there's other German companies, automotive, there's Koreans in there. So in Silicon Valley, there's quite a few, but they don't have the same exact model as we do. They perhaps put less money for each bet. They sometimes do less time. But for us, we spent about a year and a half, a year to 2 years, but typically 18 months. And we spent somewhere between 300K to up to maybe $1 million just to get it going. And then we transferred to our division that does even more. And I just have to put in a plug here for one of the things we're doing at TTB is we run a forum to teach startups how to deal with big companies. And this is going to happen in June, so if you're interested, please Google New Venture Forum Siemens, and you'll get the instructions of how to do that. Thanks.
Hi, I'm Pulakesh Mukherjee from BSF Venture Capital. So what Farshid pointed out was the different ways that the corporation interacts with the outside world, and I'm coming from the BSF Venture Capital side of it. So as some of you, might be all of you know that BSF is the largest chemical company, and depending what's happening in Greece, the last year's turnover was somewhere between $90 to $100 billion. And where we come from, one has to understand how BSF works. We have 16 different divisions of BSF. And from the venture side, it was created in 2001 with two goals. First of them is to have something called the wind-on technology, and the second is financial return. So when we look at a startup or a company, what we're looking is there a strategic fit with one of the different business units that BSF has? And when I talk about BSF, it's broadly anything related to chemistry or material. It is a much shorter list to say what we do not interact. So silicon is still one of the areas where we are not focused. So understanding BSF, we are in oil and gas exploration. Then we have crackers, which goes into making intermediates, different polymers. On the other sides, we have agrochemical business, BSF plant science, and catalysts, just to give a few examples. So when a startup comes to us, we are firstly trying to establish, is there a strategic fit? What that means is, if it is very close to what BSF is doing, we normally do not interact with that company because of conflicts of interest. If it is very far off, like Google or Facebook, we have no expertise to bring to the table. Once we establish that there is a strategic interest, and the way we do that is, we interact with the company, with the relevant business unit. We get the buy-in from the business unit that this is of interest, and we do that because of two reasons. Firstly, to validate the technology and the market, and secondly, and maybe more importantly, when we invest, we want to use the resource of BSF to make the company successful. So once we have that, we put on sort of our VC hat and say, does it make financial sense to invest in this company? Do we think we'll get reasonable return on the investment that we are doing? If both these criteria are met, then we invest in the company. So the sweet spot that we operate is what we call Series B. What that means is that there is a technology which, under NDA, we can test and validate and look at what it is. And then one of the areas what we bring to that, and we justify both internally and externally, is what are we bringing to the table other than money? If it is purely money, I'll be the first one to say Silicon Valley Bank is a better place to get money from. So that, when the criteria fits, is when we interact with the company. There are a couple of areas where, especially when we are looking at clean tech, one has to keep in mind is scale and operation matters. And that's where we think having a corporation like BSF behind it, which understands scale-up operations and things, really makes a difference, and we can contribute, and we do that. The other area which we keep in mind is, though we are a separate legal entity and operate as a fund, but having a corporate structure behind us, we are more flexible than a 10-year fund structure. So as long as we believe in a company, we finance it till we think it has a successful outcome. So if you're interacting with BSF, one of the things we manage is the internal discussions, and that's one of the roles we have. But before we invest, we always would ask for a sample so that we can validate and look at the technology before we put in our money. Thanks.
David. So a little different approach. Let me just show you this. As I mentioned, you may have heard our dialogue earlier, UTC does not have a venture arm or anything of that sort, at least to date. We might in the future. But one of the things that I think we've really focused on is understanding what we're good at, what we're not good at, and our whole approach in terms of engaging with the market. And many times you'll find some of our businesses may partner with smaller entities in terms of to come alongside and learn what's happening there. But more likely than not, we'll be ones who'll come in where we think the risk-weighted return makes sense, and we'll come in and buy a company later on, and that's the typical approach that we'll take. But having said that, I think there's a lot that I can share from our experience. I have the pleasure of leading the Research Center for United Technologies. So we are mainly in Connecticut, but also in Berkeley, California, Cork, Ireland, and Shanghai, China. And our responsibility as a central lab for the corporation is to deliver innovations to the company, but not just what we do ourselves. In fact, anybody in the room who's from the Research Center that you meet, you should be able to ask them what the mission of the Research Center is, and they should be able to tell you. It's 5 simple things. One is we're creating new frontiers. We're co-developing technologies with our business. We're solving tough problems. We're serving as a hub for technical interchange within the company, and we're leveraging a global network of innovation. One of the things we've worked really hard is to beat out an NIH mindset of non-invented here. So an easy way that you should have for connecting with where do things fit in with the corporation is actually through the Research Center, because these are folks who have every day to deliver value to the businesses and understand sort of what the hurdles are to get it there. I put this together as a title slide because you might think, someone with a great idea there on the left, and the folks in business who are looking for great ideas to basically bring to the market. It should be easy to meet in the middle and find out a way to commercialize and create monetary value for both. But often there's a maze in between. And so what I wanted to comment on just in the next slide is you need to think about a checklist of some sort in your mind to guide you through this maze. Those who are involved in ARPA-E took a lot of time to write your proposals. You may have even followed the Hellmeyer Catechism of, very famous former DARPA director who had a set of questions that he asked that still lives today in how people think about, what's the new idea, how's it different from what's done today, if you're successful, what will be the benefit, who cares, what will it take to get there, and a set of things along that line that go into making great proposals. Yet often we'll get an innovation idea that's just emailed and sent to us along with 100 other people that simply lists a description of the invention with no understanding about our business or engagement with it. So what I encourage you to do is you think about engaging with large corporations because, as you heard from Steve, they're really good at being able to do things like the production, delivery, and things that are sort of optimized in that regard, but often not as good in terms of the initial invention when you're trying to create the business model, is to ask yourself, have you realistically valued your IP? Often IP comes up first. Often people focus on terms and conditions and how do you mark proprietary information and what the licensing things are. But if you get right the understanding of the value of your IP, what that company's alternates are, and what its philosophy is around it, some companies want to own everything. Others simply want freedom to practice. Those two differences make a world of difference when you go to negotiating and trying to figure out what's the position with regard to IP. And if you overvalue your IP, you're stuck from the beginning in terms of being able to have a conversation. Second, how does your innovation fit in the overall system context, both at a macro scale and a micro scale? So whether you're talking about fuel cells and wondering where does the hydrogen come from, or nuclear power and where does the waste go, or plug-in electric hybrids and is it really beneficial if you're using power from coal plants in terms of the overall system, at the macro level and the micro level you need to understand, because often you're creating an invention that may be just a component or a new working fluid for a thermodynamic cycle, and it may not be compatible with the system. It may take a lot of work to be able to make the whole system work together. There may be a lot of other costs involved. And so in trying to find the impedance match to have a meaningful conversation, you should understand what are the other system issues that are going to come up in terms of deploying your invention. Thirdly, do you understand the corporation's business model? So you say, how would I know that from the outside? Well, this gets into why you have the conversations. And you think about what's just shown at 2 o'clock, in the keynote about a real simple way to lay out what a business model looks like. But you could take the same technology for, say, energy efficiency in a building, and one company may wish to take that to market by simply building it into its products, so you have better energy management. Another may wish to say, well, we'll give it free in terms of what you might do with consulting to create greater pull on the products that we make to pull that in the market. A third may say, look, we'll just manage it for them and provide energy services and use tools like that as part of our secret sauce to increase our margins with regard to how we do energy efficiency in the building. So you need to understand what the go-to-market approach is of the company, and so you'll know how your invention might fit in and why they might care. At least have a back of the envelope with regard to cost, not just to develop but to deploy. Because you may say in the end, at scale, it'll cost this much and may win in the market, but how much will it take to get there? Got to tell you, there's so many plans that have been written in terms of developing technology that usually the factor of 10 off with regard to the true total cost to develop it, and certainly at the beginning you don't understand that. When you think about deployment, often people think only about the product, but so much, particularly in the energy space, is around installation. I can show you technology that gets 90% plus efficiency by utilizing waste heat. But you better understand how to install that and integrate it with the customer's facility in order to realize that potential, understand those costs. These are things that are often taken for granted. And then to understand what the price is, different from cost, that the market's willing to accept, because if you have these two in the greater than, less than in the wrong order, you can only survive on subsidies, and those only exist so long. So you've got to get that right. For a big company, it matters a lot how broadly and how easily the technology can be scaled. If you're a small company, you may be happy with 10 million in incremental annual revenues that you could have for many years and be content at that scale. A large company operating globally is going to want to know, is this a technology I can take to lots of different markets? Is it going to take a lot of investment to scale it from building scale to power plant distribution scale, whatever the technology might be? Is it actually possible to do that? You've heard a lot about technology readiness levels, because this has been made very popular by NASA and DoD, talking about levels 1 to 9, from an initial invention to being proven out in a relevant environment. There's an equally important thing when you're talking about making things, and that is what's the manufacturing readiness level of the technology. It's one thing to understand the risk associated with the technology sort of from a scientific and performance standpoint, but your readiness to be able to actually make it and make it at scale, there often is equally as much work to be done and thought through in that regard. And then lastly, the company may only be your intermediary customer in the end for the technology. They're going to sell to someone else downstream. So you need to understand the end customer need in the end. As was said earlier, what is it that that end customer is valuing? So you're not going to know the answers to all these questions. In fact, many times, particularly if you're in a new area, the large company won't either, with regard particularly to business models or what the end customer wants. On the other hand, if you do your homework, like you did in writing the proposal, and understand a little bit about how your technology may fit here, have done a little bit of homework about the company, and use these kinds of questions to guide your conversation with the corporations, I think what you'll find is a lot more fruitful engagement and a lot of things not dying too early along the way. And I think in that way, certainly many of the big companies that have research centers, many of them are actually charted to be effective in being the impedance bridge between the basic research at universities and where companies are. Two last things not on the chart that I think are important to keep in mind. One is, because all these things are complex, very valuable to find a champion inside, someone who has a pain point that your technology will solve. That person can help navigate the internal maze, or that organization, like you heard two examples here from my colleagues. And secondly, don't be too difficult. I remember hearing a top VC from Silicon Valley praising Stanford and how they did their licensing, because he said they were always willing to leave money on the table in order to make the deal that made sense, as opposed to making it too difficult to get the deal done. So thank you. I hope that's helpful.
Great. So I think we'll open up the microphones now if people have questions. And while we're waiting for people to come up to the microphones, I'm going to ask a quick question on this also. So I'm an inventor. I've come up with a new idea. I've vetted out the technology. But I'm a small organization. You're a big company. How do we actually work together without, in a way that I don't wind up getting crushed out of the whole process, right? So you're working together, but you also have that fear on the inventor side of, how do I do this in a way that you'll be interested in, but you won't just run away with everything from me?
Yeah. Right. This is the number one question how do we know you're not going to steal our IP? So if I wanted to steal the IP, there was no way to do it. In Siemens, everything is driven by process, and we don't have a process for stealing IP. That's the simplest way to say it. We are there to, we know, I mean, all of us that work in this part of Siemens, we've all had our own companies. We've all started companies, we've all raised money from VCs. We know what it takes. So stealing IP is not what we want. What we want is applying the IP to what Siemens has. That is the hard part. So we want you to keep the IP. We, in fact, help you to create additional IP so that it becomes stronger. Like I said when I was talking, is we are on the same boat as you guys. And if you succeed, we're going to succeed. And stealing anything is not going to help anybody succeed. So that is not a problem with us.
Let me address from our side. So from the BSF Venture side, we definitely do get this question a lot. First thing is, when we invest, we normally invest in a syndication with other institutional VCs, and we take a board seat as well. But a lot of the time the companies ask, okay, observer for a corporate VC is good, why do you need a board seat? What they fail to realize is, as a board member, you have a fiduciary duty and legally liable to be sued by the company if you are not acting. So we actually take board seat. The other thing to keep in perspective is, like Siemens, BSF, and others, approximately our turnover is $100 billion. And this might sound a bit odd, but let's say you're wildly successful. It will be $1 billion company. It's 1% of the turnover. An article in Wall Street Journal saying BSF or Siemens stole the technology has much more value than that. The reputation to that is, other than the system in place, you have to see the cost-benefit analysis. It doesn't make sense. But at the same time, it's a very valid concern. That's for a small company, that's your life. For a big company, it's a project. So it's a very valid concern.
I would echo what is said in terms of, most as big companies, we have a very strong ethics culture. I can certainly say that in terms of my own experience at UTC, and much like what was described, that would really put a strong barrier against that in terms of approach. Really what I see is what can be misunderstanding and a confusion, and I would say the importance is having clarity up front in terms of that, in terms of, this is why you have the NDAs and have those kind of conversations. So you don't have to worry about intent. But it's important to make sure you don't misunderstand. Because some of the things that some of the big companies I've seen have worried about is they're already working in the space. And then someone comes in and puts a chart on the table that may be, many years behind what's already done within the company. And then think the company stole their idea, even though the company had already been doing it for a long time. And that's why you'll see, for some companies, their approach is to simply assuring freedom to practice for everyone. But that's where I think the most important way to address this is, one, make sure the company is ethical, which I think the three of us quite are. But then secondly, clarity at the beginning, being really clear about what the information is.
Great. Questions, please.
Hi. My question is similar to yours, except I wouldn't be worried about big corporations stealing IP. My concern is, and I mean this in a positive way, why would we come to you versus a VC for $300K to $1 million? What do you offer? A lot of us are doing this because we don't want the big corporation process, and we have all experienced it, and that's the last thing we need is to be involved with a big corporation. And I mean this in a positive way. What would you give us for $300K?
Absolutely. And taking it in a positive way, if I may address the question.
Please do. Yeah, please.
Let's look at broadly Cleantech, and here I'm looking at only Cleantech and not the IT sector of things. If you look at Cleantech, let's say solar, biofuel, what is more commoditized than oil or utility? Scale matters. The question whether you interact with a corporation in this space is not a question of if, but when, and which is the right partner and how to do it. If you were there in the talk of Steve at 2 o'clock, it's about execution, it's about building a factory. So there, what a corporate brings, or from the corporate VC, is not that the money, is that resource that we bring along with the money. If that is not clear, what is the resource we are, that's not the right partner. And the reason we invest in a syndication is there are complementary skills that an institutional VC brings to the table, and especially in the clean tech area, there is definitely value that a big corporation to roll it out, to scale up, and execute, having the market channel. To give an example, we are invested in a catalyst company which makes catalytic converter for auto sectors. To go to BMW, Audi, and to test their catalyst, if you know the market, there are 3 major players in the sector. Just to get into the door, that helps if you're partnered with one of them.
Thank you for being positive. In the cleantech space, there is very, very few companies that exist, big companies. So to get to the market, we really don't think you can go to the market without any of these big companies. You have to go through one of them. So if not Siemens, the GE, if not GE, ABB, somebody. So we differentiate ourselves because we want to beat the other big guys, is when you come to us, like we just heard, not only we provide the funding, which may be little, but we can quickly point out problems. I mean, quickly means like in a few days. So it may seem slow to you at the beginning, but if you go through your entire, burn all your funding to find out you were in the wrong, it's really bad. So we can quickly tell you, in a positive way, to go around, to change, to give up. There's a lot of things we can tell you. So that I suggest you guys come forward with that. Even we can tell you that before even you give you the money.
So if you think you have a shot at creating a company where you're going to owe $1.5 billion in taxes like Zuckerberg because you make so much money, then don't come to the big company. Go launch your company. But if you look at the risk of startups and how many actually make it, because it's really tough, like Steve was talking about, and where you think you're in a space like was described where there's already people who understand that market, there may be great value for you in teaming with them because of all the things that they've learned and understood. I just think of our own company where elevators were invented 150 years ago, jet engines at the turn of the last century, and yet the innovation has continued. And it's a tricky thing because the IT space, where things turn very quickly, is on a different time scale than many things in energy, in terms of how long will it take to convert over from coal plants or from the gasoline car and things of that fashion. And often people confuse the two time scales even though they overlap, and they take a traditional model of Facebook, Twitter, Google, and things of that fashion and think that that necessarily applies equally in the same way to the energy space. And when you realize that we have B-52s that are going to fly for 100 years and things of that fashion, there is value in having folks who understand the channels to market, who have all that, where you might be able to inject your technology, and the risk to return in the market may be less by doing it in that fashion. So that'd be the reason to do it. Lots of reasons not to do it. If it's so disruptive, the company wouldn't know what to do with it. There you may actually want to go a different route.
Great. Next question.
Hi, I'm Tyra Rankin from Houston, Texas. I really appreciate your very practical and useful comments. I think they're great for this audience, and I'm glad the first question was about intellectual property. And Rashid, your comment earlier about that you helped a startup technology company, develop their technology, and obviously there's funding involved. But along the lines of intellectual property, many people are aware that there's been a new patent law passed called the American Invents Act. And though it was supposed to help the small business or the smaller startup company, the interpretation that's being made widely is that it's going to have the opposite effect, and it's going to be really costly and cumbersome for the individual startup inventor. And so my question is, do these big companies actually get involved? Do they help out in the patenting process? Do they help file patents? Do they make analysis of the value of the patent portfolio? What kind of role do you play, if any, in supporting that inventor's development of their IP rights?
Okay, so I agree with the problem with the new law, but it's a law. So one of the first things we do is we quickly evaluate using our resources we have to tell you if your idea is already somebody's property or not. So you may not be the first one with the idea. So quite a few times we've had companies come to us and we realize, Intel has an IP on that, so we tell them and that's it. But if that passes and we do have a project with them, we assume some of the funding will go towards filing IP. But we are not there with you and your lawyer. We are there, the funding, we hope you spend it on that. If we see a weakness, we make sure you guys are protecting it. We say, hey, this is a good idea, nobody has it, make sure you're protecting it. So we do it that way. But we don't, our lawyers don't get engaged in your IP. We don't do that. No.
Next question.
Yeah, Adam Capers, Synchrony Venture Management and Schlumberger. I'm wondering how, you guys have all talked about the strategic element. I'm wondering if you articulate it publicly, how you define it, whether there's a way somebody with technology can sort of empirically figure out whether what they have has value for you, and whether you know it, in advance.
So from the corporate venturing side of BSF, when we first engage with a company, we are trying to see a strategic fit. What that means is that it is in the focus of one of the business unit, and they think that this is a technology which will be of interest. To give an example, one of our last investment was in the space of cement and concrete. BSF will not make cement, but we have a whole business unit making admixtures which goes into concrete, cement to make concrete. If there is a new cement coming in the market, then we work together. It's advantage that when that cement comes into concrete, it comes as a full package for the market. The advantage for us is that we get a 2 to 3 year lead time over others to see what the technology is evolving. Now coming to the next part is there have been companies where we invested because of strategic interest, and then the strategy of BSF has shifted. When we invest, once we invested, we try to operate as a financial investor, and as long as we believe that the company is going to give us good returns, we still continue investing as if we are a financial investor till the exit.
And for UTC, you can think of it simply as a company focused on turning energy to useful work, and doing that by fighting two forces, gravity and weather. So whether it's helicopters, elevators, or rockets, or what you need to do in terms of managing the climate so you can stay warm when it's cold outside or vice versa. And when you think about that, we're a company that also focuses mostly on commercial customers, more so than things that would be retail, which is why you don't see us advertising at Olympics and other things of that fashion. Make sure the folks in Wall Street and Washington know us and the commercial customers. And so if you think about the technologies that play in that space, that would work very well with a company like UTC.
So I think we'll get to the last couple questions here. And
yes, my name's Joe Byers. For 30 years I was with Hewlett-Packard, and I had corporate venturing functions like yours several times. I also was head of intellectual property for HP. Last 3 years I've started actually four energy-related companies. So I want to answer a couple quick things and ask a question. Regarding the IP question, having been on both sides of the equation now, let me tell you, the big guys are more afraid of you than they are you should be of them. The big guys have far more at risk if there's an IP gray area issue, and they're afraid that you're going to go nuts on them. And so I wouldn't be afraid as a small company going to a big company because they are the ones that are more at risk. That's just one point. The question I wanted to ask was, at UTC, you don't have a corporate venturing firm function. Do you still do equity investments in companies? And what is your model? Do you do that with your business units, or how do you affect that?
We do to some degree. So like Sikorsky Innovations, and Arman Sikorsky actually has seats on boards of small companies. And so you'll find in our business units that they may do that and partner in different fashions, and particularly if it's of the scale where it meets a need. So maybe one of our companies is in video analytics, and someone has an approach to doing video content management, and they may join in that fashion. But these usually come out of sort of very specific conversations and deals as opposed to a particular function to do that. It's not that we're not interested in it or haven't looked at it. I mean, our CTO came from 3M, and we're always reviewing these things and seeing sort of what good models work. One of the challenges is you can sometimes do this in a way where you can make significant money for the corporation, as some have shown, but it may not actually impact your product family where you're in. And also the other part that can be tricky, and I think this is where the setting up separate groups is good. I've been worried about IP at the university, where I had been for 10 years, and taking IP out. And what I found was structurally the university often did not understand how best to take its IP out. Because fundamentally, it would not be the one motivated to say, our IP is better if we bundle it with this other university and this other university. And we actually try to license it rather than do what our faculty member wants to do, which is create a startup. And that kind of independent view is really critical in order to make those kinds of right decisions. And that's the kind of thing that sometimes big companies, can or may not be good at, and there are lots of folks who have done that. And so I think this will continue to evolve in terms of different models. And it's great that it's being done because I think all companies need to continue to grow their organic growth and continue to innovate within their space.
Yeah. In fact, I'd also just add, having run IP strategy for the world's largest IT company and small startup companies, don't let the big guy drive your IP strategy. The strategies are different perspectives. So when you ask, can they help you with your strategy, you don't want their help. Just my inputs. And one last quick thing, the two that do have corporate venturing firms, I often see the corporate venturing function be a fad. Do you think your model is sustainable in your companies?
May I take this again?
Yeah.
So we started in 2001. It's our 11th year, moved from 3 different CEO. So it's over the fad of the one CEO thinking this is good, the next CEO has to do something different.
That's good.
Last question.
We have lasted longer than VCs.
Good, thank you.
So, last question.
Thank you. The first, Mr. David Parekh, the first bullet point that you put up on your slide was the importance of valuing your IP portfolio.
Realistically. That's the key word.
That's not an easy thing to do. And so my question is, how do you guys go about, or what's the methodology that you guys utilize to value an outside IP portfolio?
Well, I think it differs in terms of the two things we're talking about. So I'm trying to guide you in terms of someone engaging the company. For ourselves, we would look at what it does for our market in terms of issues such as giving us freedom to practice to keep growing it, maybe from a defensive position in terms of how it keeps other things from coming in, what it might do. For example, if you get it wrong, it could be billions of dollars impact. You look at the things with Apple and others, and the IP suits there in terms of opening up markets. So I think for companies, often it's about understanding how important that IP is in terms of the products you have, the markets you have, how you can grow it, how you can protect it. What I was saying with regard to folks coming in and valuing it, it's sort of like, what's your house worth? You may have paid so much for it 10 years ago or 5 years ago, and you may hate to sell it for less than that, but in the current market, it may be worth only half of that. If you keep trying to sell it at the amount you think it was worth, you'll never sell it. Or vice versa, if you're sitting on land that's extremely valuable because of natural resources and you don't understand that, you may give it away for nothing when you could have made a lot for it. And often, just like in selling your house, a deep understanding of what it's worth ends up with the engagement with potential buyers and seeing how they look at that. So what I was saying is do the homework to see what other approaches are there for doing this. Because if you're trying to license something to a company, big or small, and you're going to ask for a lot of money from them, it will really motivate them to think, well, is there another way I can do this? Rather than having to do that, or am I captive in this fashion? As opposed to figuring out how you might be able to work together to grow that technology.
Okay, thank you.
Just from the Siemens side, IP is one piece. We basically look at the entire package, which starts with the people. So if the people are good, we keep going. Then if the market is good, we keep going. Then if the technology is good, we keep going. And then if the IP is good. So that's the last thing we look at, actually. Because oftentimes, because we're so early stage, they don't have an IP. They may have filed for something, but it's in the process and it's not been granted. So most of the time we're focusing on other things, not the IP itself.
Great. Well, with that, I want to thank everyone who's joined us here today. I hope you got a lot out of the sessions, and we look forward to continuing this conversation. Thank you.